Imagine trusting someone with your life savings, your retirement, your kid's college fund, and then one day you wake up and it's all gone. Not because the market crashed, not because of bad investments, but because the person you trusted was running the largest financial scam in human history. $65 billion. Stolen from 37,000 people over 20 years. And the craziest part? Nobody caught him. He turned himself in. This is Bernie Madoff. And if you think you're too smart to fall for something like this, you're exactly the type of person he targeted. Here's how he pulled it off. I'm Lena Brooks. I've spent years studying how money, power, and trust really work. And this story is the perfect example of how all three can be weaponized. Bernie Madoff wasn't some sketchy guy operating out of a basement. He was Wall Street royalty. He founded his own investment firm in 1960. He helped create NASDAQ. He served as chairman of the NASDAQ stock exchange. This man had credibility that most financial advisors would kill for. When Bernie Madoff told you where to invest your money, you listened. Because Bernie Madoff didn't need your money. Or so you thought. He lived in a $7 million Manhattan penthouse. He owned homes in the Hamptons and Palm Beach. He had a yacht, multiple cars. The man looked successful because he was successful. Except he wasn't. He was broke. And he'd been broke for decades. Everything you saw was a facade built on other people's money. It's like showing up to a date in a borrowed Mercedes, wearing a borrowed Rolex, and pretending you own both. Except Bernie did this for 20 years, and nobody asked questions. Before we get into Bernie's specific scam, you need to understand what a Ponzi scheme actually is, because I guarantee you've encountered smaller versions of this and didn't realize it. Here's the basic structure. You promise investors incredible returns. Let's say 10% annually when the market averages 7%. People invest because who doesn't want extra returns? But here's the thing. You're not actually investing their money. You're just keeping it. When those investors want their returns at the end of the year, you don't pay them from investment profits. You pay them with money from new investors. New investor money pays old investor returns. Old investors see those returns, trust you more, and invest even more money. They tell their friends, those friends invest, and the cycle continues. It works perfectly as long as two things remain true. First, more money keeps coming in than going out. Second, not everyone asks for their money back at the same time. The moment either of those breaks, the whole thing collapses. It's like a game of musical chairs where you keep adding players but never add chairs. Eventually, someone's going to notice. Bernie didn't run a normal Ponzi scheme. He ran an elite one. And that's what made it so devastating. Most Ponzi schemes promise unrealistic returns. 20%, 30%, sometimes 50% annually. That's stupid. It attracts desperate people and raises red flags immediately. Bernie was smarter. He promised 10 to 12% returns consistently, every single year. Whether the market was up or down, Bernie's returns were steady. Not spectacular, just reliably good. And honestly, that's more suspicious than promising 50%. This is the kind of return that fools smart people, not desperate ones. Because markets don't work that way. Some years you're up 20%. Some years you're down 15%. Nobody beats the market consistently without taking significant risk. But Bernie did. For decades. You know what's ironic? The very thing that should have exposed him was actually what made people trust him more. Steady returns in volatile markets made him look like a genius when he should have looked like a fraud. He also did something brilliant. He was exclusive. You couldn't just invest with Bernie. You had to be invited. He turned away potential clients regularly. Because nothing makes rich people want something more than being told they can't have it. It's the Hermes Birkin bag strategy. Make it exclusive, make it hard to get, and people will throw money at you just for access. Except Bernie wasn't selling bags. He was selling fake financial statements. Here's where it gets wild. Bernie wasn't even trying that hard to hide it. He had a legitimate trading operation on one floor of his building. Real business, real employees, real trades. That business actually made money. But on a separate floor, completely locked off from the rest of the company, was the investment advisory business. This is where the Ponzi scheme lived. Only a handful of people had access. His brother, his sons, a few trusted employees. Everyone else was kept out. The trades happening in that division didn't actually exist. They were typing numbers into computers, creating fake statements, printing papers that showed investments that never happened. When investors logged into their accounts, they saw their money growing. They saw trades being executed. They saw diversification across stocks and bonds. All fake, completely fabricated. The entire operation ran on an ancient computer system that could barely handle the fraud it was running. It's like running a $65 billion criminal enterprise on a Windows 95 machine. But it worked because nobody was checking. This is the part that really gets me. Because it wasn't just rich people losing play money. Yes, celebrities invested. Steven Spielberg, Kevin Bacon, Kira Sedgwick, Sandy Koufax, Larry King. They lost millions. But charities invested too. The Elie Wiesel Foundation for Humanity lost $15.2 million. That's money meant for Holocaust education and fighting genocide. Gone. Hospitals invested. Universities invested. Pension funds invested. Retirement accounts invested. There's a woman named Ronnie Sue Ambrosino. She invested her entire life savings with Bernie, $1.4 million. When the scam collapsed, she had $500 to her name. She was in her 60s and had to go back to work. Another investor, Thierry de la Villouche, lost $1.4 billion of his client's money. He went to his office, locked the door, and took his own life. He left behind a note saying he couldn't live with the shame. That's not just financial loss. That's lives destroyed, families ruined, futures erased. People who trusted Bernie Madoff with everything and lost it all. So how did it finally fall apart? 2008 financial crisis. The market crashes. Suddenly, everyone's panicking. Investors start asking for their money back. Not some of their money, all of it, at the same time. Bernie's fund had supposedly $65 billion in assets, but the actual amount of cash he had? About $300 million. Everything else was fake numbers on fake statements. It's like if your bank account said you had $100,000, but when you tried to withdraw it, they handed you $500 and said, "That's all there is." By December 2008, Bernie knew he was done. Clients were demanding $7 billion in withdrawals. He didn't have it, couldn't get it. The scheme was over. So on December 10th, 2008, he sat his sons down and confessed. Told them the entire advisory business was one big lie. His sons, who worked in the company but supposedly didn't know about the fraud, immediately called the FBI. The next morning, December 11th, 2008, FBI agents arrested Bernie Madoff at his Manhattan apartment. He was wearing a bathrobe. The largest financial fraud in history ended with a 70-year-old man in pajamas being led away in handcuffs. Bernie Madoff pleaded guilty to 11 federal felonies. The judge sentenced him to 150 years in prison. At 71 years old, that was essentially a life sentence. He died in prison in 2021 at age 82. Never showed remorse, never fully explained where all the money went, never gave his victims the closure they deserved. His wife, Ruth, claimed she knew nothing. She got to keep $2.5 million under an agreement with prosecutors. Meanwhile, victims were still trying to recover their savings. His son Mark hanged himself in 2010, exactly 2 years after Bernie's arrest. His other son, Andrew, died of cancer in 2014. Bernie destroyed his own family, along with thousands of others. The court-appointed trustee has recovered about $14 billion of the $65 billion lost. That means roughly $51 billion is still gone. Money that just vanished because one man convinced everyone to stop asking questions.
Here's what you need to understand. Bernie Madoff's victims weren't stupid. They were doctors, lawyers, executives, sophisticated investors, people who should have known better. But they fell for it because Bernie had 3 things that override common sense: credibility, exclusivity, consistency. When someone with credibility offers you exclusive access to consistent returns, your brain shuts off. You stop asking questions because you're just grateful to be included. The real lesson isn't don't trust anyone, it's verify everything. If someone's returns look too good or too consistent, demand proof, real proof, not statements, not charts, actual third-party verification. Because $65 billion proves that looking successful and being successful are 2 completely different things. And if nobody's checking, the difference between the 2 can last for decades. Some frauds are sophisticated. Bernie's was just persistent. And that's scarier than any complex scheme, because it means all you need to steal billions is patience and a good suit. This channel exists to make sure you're never on the wrong side of that suit, because money creates monsters, and ignorance feeds them.